Am I the only one noticing a lot of cars being repossessed lately? Well, at least in my neighborhood. It's an undeniable sight, a sudden surge of car repossessions that's raising eyebrows and sparking questions. It's not just an isolated incident, it seems to be a growing trend, a disturbing ripple effect that's making its mark across the nation. Now you might be wondering what's causing this. Well, there's a multitude of factors at play here. The economic landscape is shifting, and it's having a direct impact on the car industry. We're talking about inflation, skyrocketing car prices, and changing financial circumstances for many folks. These are just the tip of the iceberg, and they're creating a perfect storm for a rise in car repossessions. So, what's causing this uptick in repossessions? Let's dive into some of the contributing factors. It's time to peel back the layers and understand the forces driving this concerning trend. First, we need to talk about inflation and the average cost of a car today. Inflation, if you're not familiar, is the rate at which the general level of prices for goods and services is rising. Now, pair that with the fact that the average cost of a new car has skyrocketed over the past few years. We're not talking about a few $100s here. We're talking thousands. This uptick in prices is hitting consumers hard, especially those who are already financially vulnerable. Imagine walking into a dealership, expecting to buy a car that fits your budget, only to find out that the price has jumped significantly since your last visit. It's not a pleasant surprise, to say the least. And when the cost of living is also on the rise, these inflated car prices can push some people over the edge, financially speaking. As car prices climb, more and more consumers are finding themselves in financial hot water. But it's not just car prices that are causing trouble. Interest rates are on the rise and banks are tightening up. Now let's break that down a bit for clarity. When we talk about interest rates, we're referring to the cost of borrowing money. As these rates increase, the overall cost of your car loan can skyrocket. Imagine going to your favorite candy store, only to find that the price of your favorite sweets has gone up. That's what's happening with car loans. Your monthly payments are getting bigger, not because the car is worth more, but because the cost of borrowing the money to buy it has increased. Now, about banks tightening up. This might sound like a good thing, like your favorite pair of jeans after a wash, but it's not quite so. Banks are becoming more cautious about who they lend money to. They're setting stricter requirements for car loans, which can mean higher interest rates for consumers. It's like if your candy store suddenly required you to have a perfect dental record to buy sweets. These stricter requirements and rising interest rates mean that more and more people are finding themselves unable to keep up with their car payments. It's like a game of musical chairs, where the music is the economy, and it's playing faster than some folks can keep up with. These financial changes are putting additional pressure on consumers, making it harder for them to keep up with their car payments. Unfortunately, some lenders are taking advantage of these tough times, and late payments are becoming all too common. These lenders, known as predatory lenders, offer loans to consumers with little regard for their ability to repay. Their tactics often include imposing high interest rates and hidden fees, trapping consumers in a cycle of debt that's hard to break free from. When consumers fall behind on their payments, the consequences can be dire. Late payments can lead to penalties, increased interest rates, and even repossession of the vehicle. And once a car is repossessed, it can be incredibly challenging to get it back. The predatory nature of these lending practices and the increasing number of late payments are a dangerous cocktail. They create a scenario where consumers are set up to fail, losing their cars, and sinking further into debt. With these factors combined, it's no surprise that we're seeing more cars being repossessed. And dealers aren't sitting idly by. They've gotten smart and are now installing devices on cars that enable the car to drive away, eliminating the need for a human to physically pick up the car. These new tactics are reshaping the landscape of car repossessions, making it more efficient, but perhaps also more impersonal. It's a complex issue with no easy solutions. What are your thoughts on this? Please comment below and share your thoughts on this issue.